A $350,000 house. The Parkers have $100,000 saved and plan to put $70,000 down. What will the mortgage actually cost? I'm Don Ledger. Let's follow the numbers. We will track the down payment, monthly payment, and lifetime interest. No jargon, just the numbers that change the decision. Meet the Parkers. They are both 30, have stable jobs, and have saved $100,000. The house costs $350,000. They want to know what happens after the price tag. They put down $70,000 or 20%. The remaining $280,000 becomes the mortgage principal, money borrowed against the house. At the August 20 average rate of 6.65%, principal and interest are about $1,797.50 a month. That payment does not include taxes or insurance. Taxes and homeowners insurance may be collected through escrow. Because those costs depend on the property and location, they are not included in this principal and interest total. If the rate never changes and they keep the loan for 30 years, principal and interest total about $647,101. Roughly $367,101 of that is interest. Now change one lever at a time. Down payment, loan term, and interest rate. Each changes the monthly payment, total interest, or cash left after closing. After the 20% down payment, the Parkers keep a $30,000 cash buffer. That matters because a lender's approval does not account for every repair, emergency, or family expense. Can they improve the loan without draining that buffer? We will test a larger down payment, a 15-year term, and a lower worked rate. At 25% down, they pay $87,500 up front and borrow $262,500. The payment falls about $112 a month, and lifetime interest falls about $22,944. The trade-off is cash. Instead of keeping $30,000, they keep only $12,500 after the larger down payment. A lower payment is not automatically safer if the emergency fund disappears. Next, keep 20% down and use Freddie Mac's 5.95% average 15-year rate. The payment becomes about $2,355 a month, but lifetime interest drops to about $143,944. After 10 years, the 15-year loan has repaid about $158,027 of principal. The 30-year loan has repaid about $41,741. The shorter term builds equity much faster, but the 15-year payment is about $558 higher every month. The interest saving only works if the Parkers can sustain that payment without sacrificing their cash buffer. For a third comparison, use 5.875% as a worked rate, not a promised offer. On the same $280,000 loan, principal and interest fall to about $1,656 a month. In this worked example, the lower rate saves about $50,831 in lifetime interest. Your actual offer depends on credit, location, fees, points, and market conditions. Do not chase the rate alone. Points, lender fees, mortgage insurance, and closing costs can make a lower advertised rate more expensive overall. Here's the comparison. More down lowers the payment but uses cash. A shorter term raises the payment but cuts interest sharply. A lower rate helps both, but it depends on the offers available to you. Put the options side by side. Baseline, $1,798 a month and $367,101 interest. 15 years, $2,355 a month and $143,944 interest. The worked lower rate, $1,656 a month and $316,270 interest. Then compare the whole package. Rate, annual percentage rate, points, mortgage insurance, lender fees, and cash needed at closing all affect the real deal. Use the loan estimate to compare offers. Before closing, check the closing disclosure against it. These documents show whether the numbers changed before you sign. The rule is simple. Choose the mortgage your budget can survive, not the largest loan a lender will approve. Get at least 3 loan estimates and compare the annual percentage rate, lender fees, and 5-year cost. The lowest headline rate is not always the best offer. Check your credit reports before applying and dispute errors early. Stronger credit generally gives borrowers more affordable offers and more lenders to choose from. If payments become difficult, contact the servicer immediately. A HUD-approved housing counselor can provide free help before the problem becomes a foreclosure. A $350,000 price tag is only the start. Follow the payment, the lifetime interest, and the cash left after closing. Those three numbers reveal the decision. Subscribe to House Money Lab for the next decision guide and read the numbers before you sign.